All righty, let's jump into the daily recap trades here for Wednesday, June 14th, FOMC day on the market. And what a wild afternoon it was on the market, but that wasn't the big story for our account. So let's take a look at our account and see what happened on the day. We had a $2,473 loss on the day, all due to one stock and one CFO who opened his mouth and crushed his own company's stock today. So let's take a look at that, and we might as well kick off with that particular trade, and let's jump into it right now. So that trade was UNH. Great looking chart, good fundamentals, everything right with this company. So we opened up a bull put spread at the 475, 465. Back on the 5th of June, and we did that for $1 credit. And then today, after this thing's moving sideways, we've got a little bit of a profit going. And then today, the CFO comes out and decides to say something about premiums rising, or spending more of its premiums because older 65 and older Americans are going to get more surgeries that they've been holding off due to the pandemic. So it's feeling that it must incorporate a little higher demand for its prices into next year. So the CFO comes out in a conference today and talks about it. And lo and behold, after CFO John Rex opens his mouth, the stock's going to get hammered today, and the stock did. So it dropped 7% on the day, over 31 points on the day, blowing through our short strikes. And I decided to close it at about 3/4 of the width of the spread, thinking that maybe it gets hit a little bit worse. Most likely, we might see a bounce. I think it's overdone, but I can't really take that chance. Got to stick to your mechanics. And even though it blew through my 2x stop loss, got to do what you got to do. So we did close that trade. So I took a pretty good hit on that trade, $3,250 on that trade. And it's one of those things that you can't account for. It was one of the last remaining stocks in my portfolio. I'm looking to unwind every single stock, individual underlying trade, with the exception of Amazon. I'll probably keep trading Amazon. But other than that stock, I don't think I'll own any more stocks. And UNH was the last stock in my portfolio, and I wanted to get rid of it so I could focus more on futures and some ETFs and indexes because I just can't trust it. And this is another great reason why I don't think you can trust individual stocks. You look at what happens out there on just a little bit of news. Look at NVIDIA rocketing ballistic, parabolic out there on NVIDIA. Tesla cranking, got a really big boost because of the work it's doing, with its charging stations with GM and others. It's going parabolic. Just look at some of these stocks that take off with no real fundamental reasons behind it. So I really think fundamentals is way overrated. I also think that technical analysis is a tad bit overrated, even though I do use it in my trades, but I'm moving off of it because, you know what? One single news event can, tank or rocket a stock, and it has nothing to do with the fundamentals out there. So, look at GameStop, look at, AMC, any of these types of stocks, great Momo stocks, more power to you if you're trading them and you're on the right side of those things. But all the technical analysis in the world wasn't going to tell you what was going to happen there. And all of the fundamental analysis of the world wasn't going to tell you that what was about to happen to your stock. And did you anticipate UNH dropping 7% today? I certainly did not. And the chart looked great and the fundamentals looked great. And still we got whacked because the guy opened his mouth on it. So loss on that particular trade. Let's move on to the next one. XLI, the industrial sector. We took a small win on this one. We opened up a call butterfly on this, the 102, 104, 106. It did move up today. We opened it at 56. We took it off at 75, only 7 days in the trade. It was a 33, 34% winner. Normally I'll shoot for 100% on this. I wanted to jump out here, just take the profit and run. 57 bucks, just a small winner. Just wanted to be out of the trade, take it for a winner, as I'm not really sure the next steps for XLI. And then the last trade here is, it's Wednesday, and on Wednesday we close one gold futures strangle and one ES futures strangle, and we put a new one on every single Wednesday. So we always got 4 running, we take them off. Well, it was time to take off the gold strangle, and this was the one. This was the August 28th strangle, the 1795, 2425 strangle that we had opened exactly 28 days ago. So 4 weeks in these is pretty much the typical. On this one, we opened it for 1070. We closed it for $350 on that particular trade. So a good trade overall on that one. And I think really what was nice on this one was we took in over 67% return in 28 days. So this was a 28.3% return on margin, a $720 winner, which is larger than our normal. We shoot for about 50%, and this one rocketed all the way to 67. Now, what happened to the ES strangle? Well, the ES strangles, all 4 of them, because of the market going only one direction for 2 weeks now, most of those strangles are either at a break even or slightly negative at the end of this day today. So what I felt was, instead of taking off a stock or one of these strangles at 0, I'm going to just let it run for another week. So it makes no sense to take one off at 0 and put a new one on and go through all of that cost, even though I could technically be doing that. I do think we are overbought here. Doesn't mean we don't go higher tomorrow, but this market, I think, is due for a breather. So I'm going to hold on to these one more week. However, what I am going to do today is I did add one more strangle. So now I'm up to 5. Still going to pull my one off next week. Again, I'm going to do that win or lose next week because I don't want more than 5. And if the market does drop off at all in the next week, I will take a second one off for a winner. So it'll get me back to having 4 on. So I will probably take one off within the next week. If the market does pull back, we get a profit, I will take some profit out. I'll still have 4 running, and then I'll hopefully get back to my standard trades next week. So overall, still in doing well. This trade today puts us down a little bit for the week, but we're still up pretty well on the month so far. So doing really well, and we've got some long-term 112 trades expiring on Friday. However, this week I have a lot of hedges coming due, so most likely my P&L is going to look a little red this week, because I've had hedges on and protecting my portfolio, and the market has just not sold off or dropped or had a pullback or anything. So I do have these hedges on, which is, I think, the smart, prudent thing to do. It gives me a little insurance, keeps my delta in check, which is what I like to see. However, it's an expense, a business expense, and if the market just keeps going up, we're not going to realize any profits on those hedges. I just happen to have several coming due this week. So we've already had one expire Monday. So that cost us a little bit Monday. We're going to have some more on, I think, Thursday and Friday this week. I'll take a quick look at the portfolio. So right now we have 9 hedges, including some VIX, NQ, and QQQ hedges, of which 1, 2, 3, 4 of those will be coming off on Friday. So we're going to see some red on Friday, unless the market tanks. But it's okay, because if the hedges are a loss, that means the market's going up, and typically we're doing pretty well on that overall. We've got some really great trades working. We're going to see a long-term 112 coming off on Friday. Most likely that will expire for a $2,200 winner. This week we'll have another one coming off in 2 weeks for almost another $2,000. So doing really well on those. Those things are pouring in about $4 grand a month to our bottom line. the weekly strangles. Hopefully we'll get back on that, close one of these as well. We got a couple more weeks to go in this month, so we're going to have at least 2 more chances at that, maybe 3, depending on how they fall. So we're looking pretty good, having a good month. Took a little hit today on UNH. Another reason I don't like stocks. I prefer to stick with strangles on futures. I prefer to stick with 112s on futures, and I prefer to trade indexes like SPX, SPY, as opposed to individual names. Okay, I'm all good with those going a little less parabolic and crazy on it. Even though the market's going crazy right now, it's not going the same as an NVIDIA or a Tesla. It's going a little bit more in line, and it's not dropping suddenly like a UNH or something like that. So anyway, have a great rest of your evening. Everybody have a great day trading. Again, down a little bit over 2,400 today. Little loss, less than 1%. We'll move on and we'll win some tomorrow. Take care.